All right, friends, welcome to Chart Replay. Chart Replay is a little program where we look at a historical chart on multiple time frames, and then we make some trade decisions and discussion as we move through the time frame. The lowest one we're going to be working on today is the 15-minute time frame, and the goal today is to try and figure out when we're going to see trend changes that have an actual impact on overall direction. So we'll start with our daily time frame, look at our charts, we'll work down, get some context, and then we'll start going through the tickers, or I should say the candles. So here we are on the daily time frame. We can see we had an earnings report that was not great. We had a daily indecision candlestick. We had a break of that low, and now we have seen another indecision candlestick to follow. So we can see that there is some significant price discovery happening, but there's also a little bit of balance back and forth. So no one party is in complete control of this descent so far, which is good because it gives us opportunity if we can find those key trend changes. So what are we going to be looking for on the daily time frame to give you guys some context and clues about what we should expect? If you're looking at this chart, what do you want to know about it right now?
Is it helpful to identify the support and resistance levels in advance?
Yeah, absolutely. So what we can do is we'll mark out our low, because we're going to be bearish until this chart gives us a reason not to be. So we're going to look at for low of day support at 305.81, and then we can go back historically and see if there's much in the way of support back here. And unfortunately, there's not. We ran up really quickly, and we didn't take a lot of time to establish historical supports here. And anything that we did touch, these lows, didn't really have much time to build that base. In fact, this only low we have at 308.01 is actually above our current low. So we have effectively no daily supports right now to rely on. What we should be paying attention to a little bit is going to be our RSI, but at the same time, we also have to pay attention to the fact that we gap down really hard. So our RSI is not going to be as effective as if we had been trending quickly. That gap creates a little bit of a disparity between these three candlesticks and the previous, what would it be, 11 that make up that calculation. So we're going to see a significant and quick drop in RSI, and we're currently sitting at 22.92. So 305.81 is a key support level. So what we'll go and do is jump right to our 15-minute chart, and this is what we're going to be using for our walkthrough. And we'll go, so 305.81. All right, so that's the support level on the daily. Now we go to the 4-hour time frame. We have a 4-hour bear flag that appears to be playing out, but we haven't broken that low support. So the question that I ask is, why haven't we broken that support? And what is going to happen in the very short term? So far, it looks like it's doing a perfect execution of this bear flag. What we can do is lock in that support at 314 psychological. And if we lose that, that's fine. We'll look for that second wave of that bear flag, because a flag in both directions has two major movements. You get the initial spike of volatility that causes a flag pull, you get the consolidation, and then you get the second movement. After that, you get into a period of consolidation and new pattern development. So we want to know what's going to happen at this point. We're still looking for less reliance on our RSI because of this big drop in this gap that we know is a gap on earnings. This is not necessarily going to be actual price action driving the price down. RSI is at 1631.
Volume says a lot to me.
What does it tell you?
Well, you can see how low the volume was on the bounce, and then the bear volume just picked up massively again on the way back down. I wonder if it's a volume climax. What do you think about that?
Well, a lot of it is going to be based on what's happening. So the lighter areas that you guys see, those are our after hours and pre-market sessions, so extended hours. And then the darker columns are regular trading. And they're going to be blended a little bit because of the way TradingView tends to incorporate the 6:30 start into hourly candlesticks. And that's something to pay attention to as well as you guys move through different charts. You might come across a chart that you're looking at on the hourly, the 4-hour time frame that looks different than yours. Some hourly charts start at 6:30, some of them start at 6. Or some of them start at 9 and some of them start at 9:30 if you're in the Eastern time zone. So it can cause a little bit of a discrepancy based on how the hourly charts are being calculated. But in this case, I'm not paying too much attention to the volume because we see that this is largely going to be early morning. Then we've got normal volume that we expect to see on a big drop because that's the first real day of the market earnings reaction. And then this big bear volume. So I think as we examine the hourly time frame, we might get a few more clues, but this certainly has a bearish lean to it. And it looks like we're going to see the loss of 314. That would be my expectation based on how close we are and how close that drop or quickly we've approached that level. So we go to our hourly time frame. And we can see that in the hourly time frame, again, this is TradingView's little magic. There's that 314.05 level. 314, we came, we tested, we scraped, and then in the last little bit, we've lost that 314. So it looks like we are going to open lower than 314, and we have lost that key support. So the downtrend is going to be continuing. Now, what we can do at this point is go to the make full use of the RSI because we have more than 14 periods for our calculation. And we're currently at 23.17. So we've been oversold for a little bit and we haven't seen a big reaction. So that lack of reaction has me leaning toward more downside as well. And what we can do is, in addition to drawing in on making use of our moving averages, we can also start to draw trend lines on our charts. And not necessarily to be using them for trading, but to be watching them to see if we develop into any channels. That's why I do a lot of drawing like I've been doing on SPY here, is I want to pay attention to developing patterns. I want to see if I'm good with my pattern recognition so that early on I'm paying attention to this as a channel. And I want to see that if I'm able to pinpoint when I'm getting patterns and pattern development so that I can just gain experience ever so slowly every single day. So back to our Netflix chart. We see that loss of 314. So now we're getting into the good stuff. We know we're oversold due to earnings on the daily. We know that the bears have made an attack after indecision day, and we're just coming off the heels of an indecision day, but we also know that in our after hours, we are looking for a loss of 314. We've seen that now. So now we're going to start the day. Any questions before we get going? What do you expect to see out of the gate? What's your initial take on this chart? Is this something that you would like look at and say, I'm buying this on open, I don't care? What would you need to see in order to see have some interest?
I'm a new trader and I would wait a few minutes to what you said, the pattern development,
right?
Which we could work on.
Yeah, there's not a lot here that's going to give us any hope right now. We've had a 50-minute trend. We've changed that trend to the downside. We just lost a key support. So I don't see a lot of reason for us to be looking anywhere except for a short entry on this chart at this time. Let me make sure that I am watching this correctly. So let me catch up with my other windows and other charts here, guys. Okay, 15-minute time frame. There's our 305. There's our 314 that we lost. Come on.
You like my beach clothes outfit?
May I ask a question about the time frame here?
Yes.
The after hours are just little volume traded usually.
Correct. Yeah.
Would it be possible that we could expect a kind of 50-minute equilibrium when we see the red candle, the big one, and then this the two green ones and a little flag. I'm not sure if it's correct.
It's possible, but generally very unlikely. So the reason that we get these big candles in our after-hour sessions is because there's a real lack of liquidity for you to buy or sell against. So let's say we wanted to buy on this candlestick, we can see that our volume is hidden, but let me pull it up in my other chart. Trying to get a read on it. Of course, my indicator is not showing me the exact number, but I want to, let's just say, for example, that on a regular trading session during normal market hours, you want to buy 1,000 shares of this. You may not even budge the order book, but that's because it's completely jam-packed full of bids and asks. So people are selling and buying like crazy, and you just don't have the strength through your order size to move the price. But in after hours, that order book basically disappears, and there's very few people who are buying or selling in this range. So where 1,000 shares would not move the price here, it may move the price significantly in pre-market. What happens is you tend to move the price quickly until you hit these big institutional levels that are just sitting there. So if we have an ask, or let's say we're trying to buy up the price, we hit our buy down here, it slams as far as it can, and then it finally gets filled. We may only hit 1 or 2 shares of our 1,000, but by the time we hit this cloud, because we've done a market buy, we'll buy up all of it up here, and the price will come right back down. So we pay less attention to the equilibriums that result from these sort of setups, but we do pay attention to the key levels that they tell us, that there is a wall of resistance up here because the bulls were not able to get through even at pre-market. And we also look down here in the same way. This is as far as the bears are able to go. So we have to imagine that there is little clouds of our support and resistance, and use that information so that when we break one of these levels in regular trading, that cloud's gone. So we can expect that we're going to see the potential, at least, for more upside to follow.
Thank you.
So there's our initial range. So now we're going to hit our bell. So this is still pre-market. We still have 381.81 as our support. And then we see initial pop, we see rejection, and then we see big volume. And of course, every morning, the first candlestick and the first little while is usually very volatile with a lot of volume, but we're paying attention to the initial ranges. So any strength yet? We've lost our support, so that's gone. We've lost this support, so that's gone. But we do have the high of the day here, or I should say the high of our pre-market to use as a level. And I would still be paying attention to the low of yesterday, 314.23. Acted as a support and then an area of resistance as well. So who's buying right now? Anybody?
Nope.
Yeah, I don't see any reason to. Right? If we were watching this on the 2-minute time frame and you got super confident in a scalp, then by all means. But every time frame right now is bearish and not giving us a lot of information to utilize. So because we're playing 15-minute time frames, what we want to look for is big tightening ranges. This volatility is nice, but it doesn't give us anything that we need. So there's an interesting move. All the way down to 305.81.
This is the 60?
This is a 15-minute time frame.
Oh, 15. Okay, thank you.
Yeah. So
Big
305.81.
wick off our daily support there.
Sorry, I got one of my assistants is yelling at me. He may join us. What was your question?
I said a big wick off the daily support.
Yeah, that's interesting. That's why we want to pay attention to those levels. They don't necessarily always work, but you know, if you're watching that 2-minute time frame or even the 1-minute time frame, we're now half hour into the day, so you've got a lot of 2-minute data. If you have a big oversold condition on the 2-minute time frame and you're approaching a known daily support level, then those two factors can give you a little bit of guidance that you can expect a bounce. There's a nice area of historical support. You know you're oversold on the 2-minute time frame, and you've moved further away from your mean price. You know you need to return to it in some capacity, and that's that magnet that draws the bounce back up, at least temporarily. So if you were a smarter person than me, you may have bottom fished that. But so far, we're still in a 50-minute downtrend, so a possible scalp, but nothing that we're looking for in the 50-minute time frame. Why don't we want to just buy that? Has this proven enough to us on the 50-minute time frame that this is going to be a legitimate support?
And we should establish an uptrend or something like that.
That's what I would look for. Something that tells me that this is just not going to continue. Because if I buy here on the end of this bounce, if this is just a crappy 5-minute bounce, then we're just going to go right back down. And who knows if that 305 level even matters again.
And you also look at their EMAs because it didn't even touch them, or it's a sign for a weak bounce.
On this time frame, it didn't touch them. Let me see if I can find it on. I'm going to load up my other sneaky chart because I can't show you guys. Usually I want to do the 5-minute time frame because that's what we trade on. But this one was too far back in time and I couldn't get it for you. So I will give you that information. Just let me pull it up. Where are we? Okay. So that bounce was, oh, where is my wrong time frame? Sorry, guys. Just don't have the 5-minute data that I thought I did. I suspect that this would be a 5-minute bounce right against our EMA levels. So I would suspect that we would have hit EMA 12 on that bounce because it would be significantly lower than our 15-minute EMAs. Which if that's the case, then we would expect more downside to follow because it's a nice healthy bounce in a 15-minute downtrend. Let's see what happens. All right, it's a lot of momentum again. So the one possible play that we could do would be to bottom fish this daily support. Now, when I'm looking at daily supports from historical levels, I'm keeping in mind that cloudy idea. It's not a hard level that we're going to play like a break of 315.88. This is a hard level because it has recently proven itself as a resistance because there's a legitimate order book that's still there and theoretically still there. Something like this, 305.81, this was a level from maybe 2 months ago. So the likelihood that that same order book entry that acted as a support for 305.81 is still there is very, very small. It's unlikely to still be there. But because it's a historical entry, there may be new bits of support in that area. And it's certainly something that people are going to be looking for. And there's going to be two types of people who are trading this. People who are trying to bottom fish this and those who want to trip some stop losses, break that level, see a flush, and then look for a reversal. So it's often really, really important to be watching the reaction to key levels, watching volume, looking for a break. And if you see a break without tripping lots of stop losses and no real volume to follow, you often will see a quick movement in the other direction. So we see volume tapering off. This is our first hour of trading done. We're against a key level of support, 305.81, and I suspect we're very close to a double bottom on our 15-minute time frame as well. So who would be bottom fishing this? Who would be looking for a flush? Who would be doing what? Are you interested yet?
I like the volume. I might be looking for a bottom fish here on this volume.
The volume is declining. It's looking good.
Pardon me?
Possible double bottom on the 15-minute with the declining volume and the support of the daily.
Yeah. So this would definitely be like a 2 or 5 minute play, and it's very possible that that would be an excellent double bottom. We won't have that resolution, so we may be making different choices on those time frames. But on the 15, all we're seeing so far is a double bottom that's unproven as
Right.
a second support. So now we've, in a way, if you're a boxer, you've punched the guy, but you don't know if it's had any impact. You need to wait and see. So now we see a flush right to support. Now we're seeing that volume follow through. Now I'm really curious to see what our actual low is. I'm gonna look at my other screen. So our low of this candlestick is 305.81. So to the penny, we found support. I didn't actually know that. I thought it broke that support. That's why I talked about that flush. So that's pretty incredible. Sorry, go ahead. All right. So we got a to the penny support, test, and hold. Then we start to see our volume. So that's good. We could take an entry based on that fact and have a stop loss just on the other side. That would be a relatively low risk play. And again, it would be a nice 5:15, sorry, a 2 minute and a 5 minute play. That's the sort of thing that I like to see. That's good volume. That's a perfect to the penny test of support. It's proven once, twice, 3 times. I think we're pretty happy with that. So now what we need to see is a confirmation of a 5 minute trend change. Go ahead. All right, let's move on. So now what we want to see, and of course we don't have our 5 minute chart, but what we want to see is going to be a 5 minute trend change. We've got our 5 minute low, we got a 5 minute higher high, we need to see a 5 minute higher low, and then a 5 minute higher high to lock that trend change in. So on the 15-minute time frame, it's going to be represented a little bit choppy. It's going to be a lower candlestick, and then a higher low, and then a new high. So there is that initial push down. We have our 5 minute higher low set. Then we get ourselves an indecision candlestick with a nice little double top right at 308.66. So now the question is, are we going to see this as another double bottom bounce and rejection from EMA 8, or do we think we've got some momentum to the upside? What do we think here, guys? We got a 5 minute trend change. We got double top resistance, a little bit of an increasing bear volume candle showing an indecision move.
I would look on the lower time frame and see if it's going, if it's pushed back on the later part, and then it might be seen as a bull flag in
Okay,
the low time frame.
right? I don't agree with what you are seeing in your mind, but I love the fact that you are trying to interpret what you think this might look like. That is really, really key. And for longer term trading and success, I find that you need to be able to interpret action behind the candlesticks. And that's a fantastic attempt. I really like that. And I can see how you would see that with this move here, looking at this as a pull and then a little bit of consolidation. The way I would see this is a 15-minute downtrend, a 5 minute trend change, and then we've lost 5 minute higher lows, and we're trying to look and maintain a 2 minute trend. So either we're going to lose our 2 minute higher lows and lose 307.93, in which case we're going to look for a 5 minute higher low down here, or we're going to break 306.66 and continue this uptrend. Still, we're going to need to establish 15-minute higher lows after that, because this is not a 15-minute higher low to me.
Cool, thanks. I didn't think it's 15. I thought like it could be like two minutes or
Yeah,
5 minutes.
yeah, absolutely. It could be right here, like nice and tight, and then a 2 minute bull flag. Absolutely could be that. So there's a nice move. If we are looking at this bounce now, we managed to capture this. We're going to be looking for our 15-minute lower highs because we got a long way to go and we're in a pretty established trend. Our last 15-minute resistance was there. We got a lot of momentum. I would expect that we would see some resistance because of our anticipation of a 15-minute lower high and the fact that we are coming up against another lower high on the 5. So 311.13 is a level. We got a cloudy level. It's starting to get too messy for my charts. What we can also do is try to draw in a little bit of resistance and see how this plays out. So I'm just drawing on the tops of my greens, trying to incorporate as much data as I can. Let's zoom in. So if we've bought this double bottom, we're looking for an exit. So we want to see is going to be some 2-minute oversold or overbought conditions. We want to be looking for resistances where we can find them. We've got an EMA 26, we've got a trend line, and we've got a level from our 5-minute chart. What we want to see is some actual price action in the candlestick that is going to show that profit taking and that attempt to reverse that direction. And so far, we get this in a nice shooting star. So that shows that bullish momentum. It gets us right to that trend line, right above our EMA 26, and then we see the bears counterattack. The fact that we close green shows that there is a minor counter trend, so a 2-minute push or a 5-minute push in the last part of this candlestick, which is going to stifle the bleed. It's not going to be, it's unlikely to be a straight rejection to the downside that we would expect if this was a big red candlestick, because that would be bearish maintaining momentum into the close. Right now, it's a little bit indecisive. So here we see that indecision. Here's our close. We waffle again, maintain 2-minute higher lows. The bulls make another attempt, fail, and are driven down. So I suspect that the bears are going to have some momentum now. And you see how they're fighting back and forth with these big pushes and these big responses? When you get into that sort of counterpunch, balance / indecision, that's how we end up with dojis on the hourly time frame, where they're fighting back and forth, but ultimately getting nowhere. I'm going to clean up my chart a little bit. I don't need this guy anymore. Don't think we need that anymore. That's not one nice way to look for areas of confluence. Just like down here where we were trying to find coinciding indicators of support. So historical support, double bottom on today's candlestick, oversold conditions on the 2-minute time frame, increase in volume. We're looking for the same in inverse when we're looking for an exit. We're looking for resistance. We're looking for trend lines. We're looking for candlesticks, any combination of indicators that show us that the short-term momentum has changed. So what's the move here, guys? 50-minute higher low. All right, let's move on. So if we are going to be looking at a 15-minute uptrend, then this would be our first significant 15-minute higher low. Now what we need to see is either a break of 311.98 or a loss of 309.07. In my mind, we've already moved too far away from this to be looking for an entry. I want to be getting as close to possible to my 309.07. So if I see some a more immediate weakness, I would look for an entry in that area, but I need to see that bullish response to lock in that double bottom that may be on the 2 or 5 minute time frame. Still waiting for a more decisive pattern. So far, we've only seen that double bottom support and bounce on the 15. So another indecision candlestick. A little bit of bullish intent here, but initial rejection from our EMA 26. And our old trend line may still be in play. Let's see if that still matters. Slightly, but it's not perfect. Another rejection. Now we're getting into Dinsy's smush zone, as she likes to call it. So nothing definitive yet on the 15. Volume is really slowing down. It's looking pretty indecisive. And I suspect on the hourly time frame, we're looking at some dojis here. Bearish push, no follow through, no real increase in volume. But then we do have what appears to be a double bottom at 309. Oh, let me clean up my charts because I'm running out of levels here. 309.62. So if I'm watching that 2-minute time frame and I see that push and I see that hold, I may take an entry. I know I've got a couple of support levels behind me. I know that we've got an overall 50-minute uptrend. And if this is a double bottom after forming a 50-minute high or low, I may take an entry with the anticipation that we'll break EMA 26 and resume this 5-minute uptrend. And then I would stop out if we lost 309.07.
Can you tell us where you can put this, where you will put the sorry about that.
Either you're really angry or you have a large dog. I couldn't understand your question, sorry. I think you were asking where I would put a stop loss. And if I'm scalping, my stop loss is going to be just on the other side of 309.62 because I don't want that double bottom to break. If we lose that double bottom on the 2-minute, it's likely we're going to test 309.07. And if we lose that, then we're back into our 15-minute downtrend. And I certainly don't want to get caught in that because we know we're in an overall daily 4-hour hourly downtrend. So we're scalping counter trend, and we need to be very, very careful. So even now, I would be looking at taking profits on my scalp because I don't like that we jumped up, we saw a counterattack, and now we're trying to push back against it. It's a little bit of indecision. We need to get over EMA 26. So there's another push. And we are looking at another shooting star. So this is another candlestick like this one, which is showing that bearish push, the bullish push, and then that rejection. So unless we can get over 309.98, I'm going to be pretty cautious. I'm going to be walking up my 2-minute levels and just inching my way up as we keep setting these higher lows. So I'm still walking, still setting. And if we do this properly, we'll be able to walk it up and get a break of 311.98, or we get stopped out. And without being able to see where we are on the 2-minute, I'm just going to speculate where our 2-minute higher low may be. And let's just call it right in the mid-range of this candlestick. So if we keep walking it up and we get another 15-minute bar, well, we would walk up our 2-minute stop loss. But if we start to see a trend change here, then we're going to get stopped out. And we're going to have that double bottom buy as our entry, and then having the market decide when that 2-minute trend changes to lock in that scalp move. So it's not a long-term play. We'd be in this for maybe an hour. That's probably too long even for a scalp. And there we see that big trend change. And we start looking for support at 309.07. Then we've got our loss of that key support. So what do you guys think is the move now? This is kind of a choppy chart, hey?
Got a little bit of pushback from the bulls off that break of support 309.07.
Give me one sec, guys. Sorry, guys. Could you repeat that last thing?
So I'm just seeing us have a little bit of a pushback after we broke the support from the bulls
Mm-hmm.
so far.
Yeah, so we've definitely got a 5-minute trend change happening here, but it is very choppy. So we would need to see some substantial follow through. And I would expect to see more volume on that break. So lack of volume here tells me that the market doesn't necessarily agree with the break. And if it does, it's not going to be a big volatile break. It's going to be a dawdling break. And then we would see that dawdling break as the loss of that level, and then a lower high and the development of a new trend. So there's bull volume, not very impressive. Another test at 309 level, which still seems to be important. And I didn't notice that until just now. That we closed there and we had that support test. And there's another one. But now we are looking for a 5-minute downtrend. Here's our high, a low, lower high. Bears have momentum. So we're likely to see a break of 309.07. But if we can hold that low of our initial break, we get into a 5-minute equilibrium. And then from here, we would expect to see either a lower high. I would expect to see a lower high under 310.26. But we see that initial rejection, bulls answer back. And because this is a 15-minute time frame, we're out of time. So the overall takeaway, I guess, from this was how important that daily level was. We had that initial 5-minute oversold bounce, or the 2-minute oversold bounce. Probably saw a beautiful rejection from our EMA 26. We came down, tested it again, and then we had a to-the-penny confirmation of support. From a daily historical level, we saw an increase in bull volume and very likely a 1 or 2 minute trend change, which carried us quite nicely directly into that trend line that we had found, that confluence between our, where was it here? Our confluence of our EMA 26 and that trend line into choppy indecision. So a lot of today wasn't very useful for trading, but we did have a couple good opportunities. So short and sweet chart replay today. I do have to go because I need to take my little guys to school. I forgot it was a preschool day. So I'm going to be running out. I should be back in about 15, 20 minutes. If you guys have any questions, please send them to me in Slack and we'll get this all figured out. Thanks for jumping on. A very quick chart replay. Next time I'll make sure we get a 5-minute chart because those are a lot more fun and we can actually dig into those changes and see those breaks in real time. All right, guys, let me know if
Thank
you
you
have any
really
questions.
much. Thank you.
Thank you. Take
Later,
care.
Jason.
Thank you.